Good evening, ladies and gentlemen. Today is Monday, December 9th. It's the Stock Market Brief Show. Thanks for tuning in. We got a lot to discuss. The comeback that nobody sees coming. We're going to be diving into some individual names, 5 stocks to be exact, some that have been being beaten down, some of them have been beaten down, and now they're at potentially bargain deals. You'll understand that a little bit later, but that's not all we're going to talk about. We're going to hop into the futures market. We're going to look at market conditions, expected moves for the week, and a little bit more. Now, before we hop into today's show, I want to first thank my patrons. For those that don't know what the Patreon is, I have a Discord that syncs up to Patreon. It's only $9 a month, and it includes all types of benefits over here. Don't want to waste too much of your time on this, but this is how you can support the show and get some additional data, including the daily, weekly, monthly, quarterly expected moves. You get the whole set of the Tradie Ticks bot suite, including the query channel where you can type in various commands and get cool charts, especially if you like to trade intraday. Market net flow is one of the popular ones, but you can get research on individual stock names there too as well. And then I give my daily zones documents. I give my watch list, the tight list, which are stocks from the watch list that are tightening up, and so much more. I also got to thank Interactive Brokers. This group has been supporting my channel for quite some time now. So if you haven't done so already, make sure to check out Interactive Brokers. It's in a great platform. They've been working on a new piece of software. Beta's already out. There are many versions that have already came out. It looks pretty similar to Webull. I use it on occasion myself. And there's also another interesting thing is if you click the link, there's a Interactive Brokers campus where you can learn all kinds of stuff, right? So they have a Traders Academy where you have all of these type of finance courses from beginning to advanced. These are all free. And then you have various other things like Trader Insights, which gives you some very cool insights into the market. Various blog articles there. You have webinars, podcasts, et cetera, and so much more. So with that said, let's go ahead and get into today's show. All right, ladies and gentlemen, welcome back to the show. I want to start off looking at back month versus front month volatility. We've been talking about how it's been extended for some time, which tells us that the market thinks that there's going to be volatility in the future. And if there's going to be volatility, that means we can see the market kind of get shaken up a little bit. And we're still above that 0.20 marker, 1.20, which is 20%. Tells us that back month volatility is 20% higher than front month, which is the VIX. So it's no surprise that when we get into these levels, you start to see things slow down a little bit, right? And what do we see today? Well, we started to see some of the names come in. NVIDIA was down 2.25%. Meta was down 1.64%. Amazon was rather flat. We had some other names that were up. Financial sector down. If you look at the 11 sectors, the only 2 that were up was healthcare and real estate. And then if you look at the index products, pretty much everything was down across the board, but minuscule, right? It was just profit taking right now. So instead of freaking out, we got a plan of what to look for in the near future to be prepared for if we do get some more sell-side action. Now, if you were trading intraday and you had access to market net flow, or you're in the Discord and you were typing it in, this right here tells you to just basically be on the sidelines if you're trying to buy long, right? You have the cumulative net premiums of puts that were basically up all day. Then the cumulative net premiums of calls were below that and trading kind of sideways to higher too. This, by the way, the convergence doesn't show. It'll show a different indicator if you use the Discord query channel. It'll show market net flow. Still very beneficial to have this or know what's going on with market net flow. If you want to be on the right side of the trade, which is a very good theme to today's episode, to not trade against the river, right? And if you are going to be trading against the stream of the river, you're going to try to swim upstream, to be aware that you're doing that and make sure your positioning sizing makes sense for that type of an environment. Now, as the market came in, right, we started to see a strong move to the upside. We started breaking this little shooting star candle, and we came in a little bit. So, I mean, are we that surprised? Absolutely not. We'll go over expected moves here shortly. If you look at the weekly chart, we got extended from the weekly 5 EMA. To see this tag in the near future makes absolute sense, right? When we get extended from it to the downside, we shot up. When we get extended to the upside, we shot down. But right now, it's still an inclining 5 weekly moving average, and that is a good sign, right? We got extended right here. We snap back down, right? So to come back into it at some point, it's one of the more frequently tagged EMAs. Obviously, it's the 5 weekly, but the trend, the direction of it is still to the upside. Now, as we came in a little bit, we still have not tagged the lower weekly expected move. We're pricing at about a $6.32 move for the SPY this week. So as the market came in, Maybe it was led because the bond market was also coming in 92 basis points. We talked about a diamond pattern on this specific day. We said the measured move was to and around 95, and we just about tagged that level. And the 10-year yield obviously rose a little bit today as bonds came off, and it is in this kind of flagging formation. So if this goes up, I think that would be very important to pay close attention to, because the dollar too is starting to wedge here. And we talked about how during the last Trump election in 2016, we saw the pullback during the same time frame of the year, and then it rallied into 2017. Now it'd be 2025, and then on 2017, the dollar was basically down a series of lower highs and lower lows, which really led to some strong market performance. And you can see that here, right? If you think of things in an intermarket standpoint, you can look at the dollar, you can look at bonds, right? You got currencies, bonds, and then you get the equities, right? The markets. The dollar down, right? The 10-year yield down. And what was the S&P 500 doing? It was going up. And when you have the dollar up and the 10-year yield up, what was the S&P 500 doing? It was going down. So in the near term right here, you have the dollar down, the 10-year yield down. You have the S&P 500 that's been grinding up higher. So one might think that if the 10-year yield does want to rise or move up a little bit, maybe it just consolidates out, pulls back the S&P 500 in the near term. So we got to be aware of that. Let's take a look at some of the expected moves. Okay, so for the weekly expected moves, we're going to go through these fast. If you want them, screenshot this and put them on your chart. 601.50 to the downside for the week, right? We didn't even get there, right? We're close to it. 614 to the upside. Now, if you don't know what expected moves are, in short, we pulled these on Friday of the prior week, and what this tells me is what the market is handicapping for forward risk, right? I do this for earnings moves. I do it for the week. I do it for the day. I do it for the month. I do it for the quarter, just to give me an idea, a sense of what the market priced in. Now, a little bit of probabilities for you, right? Over 75% of the time this year and last year combined, we tag the weekly expected move. So if we are going to see more sell side, pay very close attention to when we get down to these levels. It's rare to close outside of it, but it happens, right? 68% of the times, right? If you think of it in terms of a standard distribution curve, we do close within the weekly expected move 68% of the time. Now, the daily expected move, I'm using a couple of levels here. This right here, the white line is going to be the 0 date, 0 DTE expirations, right? So 1 day as it stands right now, and it's giving us an implied move tomorrow of 607.17, 602.19 to the downside. And then I use the VIX daily implied move. So I just take whatever the VIX is in percentage terms, obviously, and divide that by the square root of a year. And that basically, in short, gives me the daily expectations, right? The daily move of the implied move of the VIX. And I kind of draw it out like this as a zone. So if I'm going long and we start creeping up into these areas, I know to potentially take some profits if I'm day trading, or if we start to see wicked sell side to the downside and we get extended outside of the weekly, maybe even outside of the daily VIX implied move, I would be comfortable with looking for a potential opportunity back into these levels based off of probabilities in the market. So it just depends how price gets down there, what it does around there, and I wait to see if we can see higher lows and higher highs on different time frames. Now, a couple call outs here. We're below a declining week to day anchored volume weighted average price. Okay, that's the daily. So tomorrow it's going to be the 2-day. And then we have the month to day anchored volume weighted average price that we're below that, and we're below the 5-day moving average. So time to be caution here. It'd be better if we start reclaiming these areas and hold above it. So right now it's a time to be a little bit cautious there, but we'll talk about market conditions. Qs, it's above the month to date. It's below the week to date. It's above the 5-day moving average, which is still inclining. We have yet to tag the weekly expected move, right? It's only the first trading day of the month. Of the week. And then going into tomorrow, we have our daily implied moves at these levels. If you want them, just screenshot it and put them on your screen so we can kind of keep this show moving along. Let's talk about the conditions of the market, because they are starting to change. Right now, I would put this in the category of bullish, but with caution. Why? There's two things I look at as far as when conditions change. And this doesn't mean bearish and then really bullish. What it does mean, though, is your strategy, if it's working in this environment and the environment of the market changes, there's a high possibility that your strategy might not work as good when the conditions change. And I'm not just saying that the conditions are changing because I think that they change. It's legitimately the conditions of the market change when we're below this gamma flip line. So that's the first thing that I like to look at, right? The gamma flip line. The gamma flip line lets me know how dealers are going to respond in this market, right? When we're above a gamma flip line, which we have been for some time now, dealers will buy the dip. They'll sell the rip. Volatility comes in. When we're below the gamma flip line, you get selling into the selling into the selling, but you get buying into the buying into the buying. So in this environment above a gamma flip line, I'm more of a swing trader. But in this environment, I'd be more of a day trader, given the context that, day traders like more intraday volatility. You get two-way price action swings back and forth, and it could be quite beneficial for day traders. Now, when I'm swing trading in a negative gamma, I typically reduce my positions, and if the trade really is good, I'll put on the position, but it's typically reduced as far as size goes, because in that environment, I typically get a lot more fake outs, whipsaws, false breakouts, etc. So right now, we hit that 6,100, which happens to be the call wall. We're getting hung up in and around that area, but it's still a massive area. And we're right at about that 60.50, and we're still holding gamma flip line as it stands. The next thing I look at is the 5-day moving average across other products. So SPY, it's yellow right now, which is saying, hey, just be cautionary here. If it starts turning red and this starts turning back around, hey, be careful, because that we could start seeing lower highs, lower lows, and it could lead to something a little bit bigger, especially if we get into negative gamma territory. The Q's still above that 5-day moving average, and it's inclining. IWM, it's kind of flatlining here, but it is declining. DIA started declining over here. XBI is rather flat, and semiconductors is starting to turn red too. So this is why I'm starting to say it's bullish, because we're in positive gamma, but it's a little bit of caution because some of these index products are coming off. They're digesting in the very short term. Now, if I go out to the daily timeframes or the weekly timeframes, remember, the trend is more bullish in those timeframes. So I just trying to get a quick, small view, because if there's going to be some big sell-off, big crash, big everything, it's going to happen on the smaller time frames first. But also, it's going to have more whipsaws on it too as well. So bullish with caution here. All right, let's go into the futures market now. So I last time we really talked about this when it was setting up, we were looking at the 50% retracement as it was pulling down into these areas. So all I'm doing now is we're starting to see a little sell side is redraw that out from this low to this high, and it's giving us a level right in these areas, which for ES, it's at about 59.80, right? I'm just picking a level between these levels. But we're looking at the 50% 61, which is also known as the golden zone, right? Not to say it's going to come down here, but what I want to prepare you for is if price were to come down here, a lot of people on a 50% retracement, they would start to probably freak out a little bit, right? But if we're preparing for something like that ahead of time, what would it look like if the market comes down here? Well, at that time, it would be a higher low in a series of higher highs and higher lows. So this would just be a pullback within an uptrend. So at this point, if we come into these areas, or maybe not even there, or maybe a little bit lower, I don't really know. But if we start to see strength and it starts to tighten up, it offers up low risk opportunities to potentially follow through back up into a bullish trend. So that's kind of what I would be looking for. Not to say that that's going to happen, but that is what I would be paying attention to and looking for, given the context of what we currently see in this market. So that would be BES. NQ, same situation, right? The last time we talked about it was down in these ranges, right? And we started saying, hey, we can see some resistance up in this area. And it came into this area, and we started to digest underneath this prior area, right? Once resistance is broken, it becomes support. Once it breaks again, it can become resistance again. And now if we pull back into these areas, well, prior resistance can become potential support. So even if NQ was to pull back in, we'd still be above a 20-day, above a 50-day. We'd still see a series of higher lows and higher highs. And then if you start to see strength from these levels, that could present opportunities to follow through on the bullish price action in these names. But if you're not prepared and you're unaware, when if the market even comes down in here, you might be scared. You might be, shorting into the hole or switching a position, not understanding, not knowing the context of the current market. And even if it comes down here and dives into here, it doesn't mean buy in these levels. You got to wait to see if the market tightens up and starts to see strength, right? And then go from there. What I like to do personally, like I said, is look for the 5-day moving average. What's the direction of it? Then are we in positive gamma territory or are we negative gamma territory? And if the conditions are getting better, that could present opportunities. The ready, right? Went for a breakout today, but started coming in. We've consolidated here for a couple of days around that 20-day. If this starts breaking in, start paying attention to about 23.70, slightly lower. That would be a 50% retracement of this strong move over here. We actually saw the same thing, a strong move. It pulled in harder and faster and undercut the golden zone. Now we're just kind of gliding sideways in and around these areas. So if we start to come down in here, there's no problem. We can potentially come to the 50-day moving average. But if we start to turn back up, it could offer a good risk to reward to come back and see, once again, the series of higher lows and higher highs take place in the Russell 2000. If we look at the mini Dow Jones Industrial Average futures, right? We pulled into the golden zone here. The new golden zone is from this low to this high. It would be right here, which is roughly at about 43,800. I'm just picking a number within there, or 44,000, right? So if we start to see more sell side, what would that look like? Once again, it would be higher lows, higher highs. Now, in all these cases, what would change the trend? Well, if we start breaking down to see a lower low, sorry, and we'd have to come all the way down here, or we'd have to see something like this, right? ES would come in, and guess what? We bounce up or something, maybe something like that. And then what happens? Oh, shoot. Then something like this would say, hey, be very cautious here until we start to tighten back up, because this would be a lower high and this would have been that lower low right there. And that means that even if it pops up, we could be seeing a potential change in trend or a longer consolidation on the horizon. I want to go ahead now and quickly mention this chart. Now, this chart is the put to call ratio, the total put to call ratio, which is CPC, but I'm applying a 10-day moving average to it to smooth things out because it's rather spiky. And when we get down into these levels, this black line over here, you can see the prior couple of times that we've done this, when the line starts to turn up, it can be rather bearish. So the last two times, right, we saw about a 7% correction here, and then we saw about a 10% correction here. Now we're back into these ranges, and if this starts to pick back up again, hey, you never know. We may be in for another 5% correction, and this lines up very well with the back month, first front month volatility. So I would say that if the conditions of the market get worse, right, if the 5-day moving average starts to decline, which they're not really doing right now, other than, IWM, XBI, semiconductors, but it's not in the Qs, it's not in the SPY, it's not declining yet. And if we start to get into negative gamma territory, that could perpetuate a potential correction in the markets from 5% to potentially 10%. We'd have to go about it when we see it. So like I said, if that happens, we'll look at the series of higher lows and higher highs, and then we'll gauge what the market's doing at that specific time. Now, what you've all been waiting for, right? The comeback no one sees coming. We're going to talk about some bargain names in the market. Now, by bargain, I don't mean that they're just a good value, right? That's not necessarily what I mean here. What I mean is these are actually bargain-based companies, meaning you'll see what I mean. I'm talking about the Dollar Tree. I'm talking about Dollar General, Grocery Outlet, Bargain Market, right? And a couple other names. Now, these names, these have been like forgotten about, right? They've been hammered down in the last couple of years. And perhaps it's because, the Dollar Tree can't sell things for $1 no more. So are they going to adapt and change? Is this what the market's been pricing in all along? And now they're going to start to base out and build bases and start to move higher. But the reason why I'm pointing this out now is because we've been seeing some strength in these names in recent trade. And yes, they are below their declining 200-day moving averages. They're in a bad trend. So keep that in mind when it comes to this. But it's the last two I'll go over are actually in bullish trends and are higher on the radar for me. But the Dollar Tree, right, we saw some strength. Earnings came out, and now we're consolidating as volume's drying up. The 50 days starting to flatten out. The 20 days starting to turn back up here. So if this starts breaking from this base in the near future and comes to fill any of these gaps, we're talking that's pretty big moves as price is right at about 70, and even just this move right up into and around this range is up to and around 82.50. These can be some pretty decent sized moves in names like Dollar Tree. Look at Dollar General, right? You saw the low, you saw a lower low. The RSI was a bullish divergence. The same thing was within Dollar Tree, right? You saw the bullish divergence there, and you started to see it play out a little bit within these declining trends. Earnings came, right? We're higher than when we reported earnings. We're above a 50-day moving average. The 20 days starting to turn around. The 50 days starting to flatten out. And, we're starting to kind of break from this wedge structure here that we've recently seen. So if these names could start to tighten up and offer a lower risk to a potential higher reward, they could set up for pretty good names or for pretty good trades like we're seeing right here as prices kind of coming in, right? Flagging after a pull, perhaps that opens the door for a little bit of a continuation or a little bit of a push in Dollar Tree. Now, GO, right? This is Grocery Outlet Bargain Market. Earnings came. We saw a very strong move from earnings. Now the 20-day turned up. It's rising. The 50 days starting to incline. And guess what? No surprise here. It got rejected at a declining 200-day. right? It did the same thing over here and started heading lower. So there's no, who knows if where this thing is going to potentially go to. But if it starts to just shape up a bit more and we could start holding these higher lows, and you can see here, it recently broke this trend, right? If we come in and price starts to try tighten up here, it could potentially set up for nice moves in the near future. And eventually the 200-day could start to flatten out and potentially start to turn back up. So I think that these names have to be on the radar for a trade setups, and see kind of how that, how it reacts and responds as the 200-day starts to come in a bit more. Now, two names that are actually in much more bullish conditions, and these are bargain outlets as well. So OLLI is Ollie. Now, this one's reporting earnings in a day or so, so we'll see how it reports. But right now, I mean, you're above a 200-day that's inclining, a 50 days flat, 200 days rather flat here too as well. But we're in this base that's been building. So if we start to see, a strong earnings move, I'd be looking for consolidations and potentially follow through plays up to and around 120 for Ollie. And the reason why I say 120 is because that would just be a, double size of this base. It'd be a measured move. Now, I'm not huge on targets, but it gives me an idea of risk versus reward. So, if you don't like targets, that's totally fine too, because who knows how high it can go. It can go way through 120, right? Or it might not even get up to 120. So we don't really know. But as price continues to develop, you can initiate and see better areas for risk when these names set up. Now, the reason why I like to wait to earnings, let me show you. Look at BJ's. This is ticker symbol BJ, BJ's Wholesale Club. This one is also bullish conditions, right? Rising 20, rising 50, rising 200-day. Earnings came out and the market liked what it saw. Now, this is what I like to see. Earnings, boom, you get a strong move, and then we get a consolidation. And right now, it's kind of flagging out, and it's still holding this breakout zone of this level. So as this is coming in, even if it were to come in more, right, this right here could potentially be setting up for another move up to and around 108 to 110 area for a full measured move there, and potentially even higher if this trend wants to continue. That's all I got for you on today's episode, everybody. Hope it helps out.